Hey, good morning, everyone. Welcome. Today is Tuesday, February 17th. This is a meeting of the Economic Development and Housing Subcommittee, and we have a new format. And if you have looked at your agenda, there is a lot to cover with even timestamps. So we look for great participation and stay. So I would like us to start with introductions. That was not on here, but it's always nice to know who you are in the room with. And it's a great group I see. My name is Kate Collin. I have the honor of serving as the city's mayor. Councilmember Hill.
My name is Eli Hill. I represent District 2 on the City Council.
Good morning. My name is Micah Hinkle. I'm the Community and Economic Development Director for the City of St. Rafael.
My name is Jeff Kelly. I'm with the Housing Authority, and I help you guys manage your inclusionary ordinance and portfolio.
I'm Kalina Cloud here from CPI Developers for Stephanie Plant.
Hey, good morning. I'm Paul Novazio, Director of Finance and serving as Acting City Manager.
Hi, good morning, everyone. My name is Priya Nixon. I'm a Senior Analyst in the City Manager's Office.
And good morning. My name is Stacy Lama, and I'm the Economic Development Program Manager here at the City of San Rafael.
Hi, everyone. It's Lena Smith, Community and Economic Development Analyst.
Dariush Davidi, a small business owner in San Rafael. I also serve on the board of Chamber of Commerce with these two.
Omar Canal Alliance.
Aaron Burnett, Canal Alliance.
Karen Strelia, President and CEO of the San Rafael Chamber of Commerce.
Greg Miner, Community Economic Development.
Sarah Tipple, Director of Business Improvement District.
Fantastic. We got a powerhouse group here, which is a great way to start off this meeting and the week. So first is approval of the minutes. Are there any changes, Councilmember Hill?
No changes.
Okay.
I move that we approve the minutes from last meeting.
I second it. All in favor?
Aye.
Okay, that carries. Open time for public expression. This is anything that is not on the agenda. So if anyone would like to speak, we take public comment in the room. I don't see any raised hands. So we will move right into the economic development partner updates. And I'm thrilled that the San Rafael Chamber of Commerce, as well as Marin Small Business Development Center, the CDC, will be providing updates. So I will turn it. Should I go right to the chamber, or Stacy, did you want to say anything, or do we have? No,
go right ahead. Thank you.
Great. Happy to be here. We've got our economic forecast happening tomorrow, bright and early from 8 to noon. We're covering topics around our workforce. What does it mean to hire employees who cannot live here? So we're also talking about housing. We've got an economist coming in to talk about federal, state, and very Marin specific data. He did a year of time with Derek Johnson and his team at the county to understand local action, local data. So we're excited to have him. I also wanted to mention that we spent some time after the king tides connecting with our businesses in East San Rafael. A lot of them were severely impacted, standing in water up to their shins with wet vacs trying to get water out of their warehouses. We were able to work with the county on getting calamity claim information over to those businesses, which has been helpful to some, but not all qualify. So there are still some businesses in East San Rafael that are really struggling, trying to recover from those king tides. And then last but not least, I don't want to take up too much time. I just want to give a nod to our downtown business improvement district director. Sarah is working really hard on bringing up the May Madness efforts. So that will be kicking off in May. So keep your eyes and ears peeled. She's got a lot going on, so check the calendar. And that's it from the chamber for now.
Karen, yeah. Can I follow up with a question?
Yeah.
As far as how would you characterize where businesses are not qualifying for calamity claims?
That is a great question. There are variables that each business is either qualifying or not qualifying for, and I'm not sure what all of those are. I didn't ask those kinds of questions. It was a mass push out, and then I heard from some of them, "Oh, this is amazing. This works for us." So, for example, city carpets did not qualify, but helmets did. So, and I think maybe the nuance to city carpets is the property and they've got a lot going on their property in terms of that partnership with the waterway and all of that. So that might have an impact. I'm just not sure.
Okay.
Yeah.
Well, I'd certainly love to follow up to understand if, all the business can understand what that qualification is. It's a low bar to remediate, obviously, the next king time that happens, which is probably imminent. make sure more folks can get above the line,
Yes.
literally and otherwise.
The waiters, yeah.
I will put you on the spot because I know one of those events is going on right now. I was reading about 2 events. Oh,
Yeah. So our third annual Lunar New Year horse hunt and scavenger hunt is happening right now. And we were actually featured live on TV by KTVU, which was really exciting, putting Santa Fe on the map. And if you guys don't know what it is, it's a art walk scavenger hunt that celebrates Lunar New Year, and it's the year of the horse. So if you walk around to all the businesses that are participating, you can get a map on our website, downtownsantafel.org, and you can go find the different letters and unscramble the letters to create a really fun Lunar New Year themed phrase. And we also have February, and I'm partnering with Smart, which also put downtown Santa Fe on the map. When they launched it about, I think, 4 or 5 years ago, Santa Fe only had the stateroom and pond farm listed, and I got them to add all of our tap rooms and breweries. So we have about 7 or 8 businesses on there, and other down stops only have like 3 or 4. So it's a lot of fun, and the social media promos that we have going for it is really good, and the businesses are super stoked. So that's a lot of fun, and those are happening this month, which is great.
Okay, may I make a comment on
yes,
that?
please do.
So I will make a testimony that my daughter and I have done the treasure hunt for the Lunar New Year. We did take pictures of every single horse because it was not obvious where the letters were. I will say as an asterisk that we are not using AI to help us with the anagram solving, but we have all the letters before us and we will hopefully come in with an answer.
So when people submit their answers last year, I asked, thank you. What do you want me to bring back to the committee for updates? And everyone said it was too easy last year. So it is a little bit more challenging this year, but you found all the letters, right? Okay.
We think we did.
Okay.
It's not super obvious, but I just want to commend that the diversity of businesses that participated runs all the way down pretty much to the train tracks all the way through to the west, the deep west end.
Yeah.
So thank you for making certain there was inclusive of everyone along 4th
Yeah,
and along 2nd as well.
The scavenger hunts for our downtown is spectacular because a lot of our events are just focused on one block, one day. But I like to create these month-long downtown length promotions that bring feet to the street for the whole month and to all of them.
Feet to the street. Okay, we're going to be using that phrase. That's awesome. Thank you. Any other, well, let's finish the next one, then we'll go to any additional questions. So Marin SBDC, someone?
We're in SBDC. Unfortunately, Miriam Carell is sick today and she wasn't able to join us.
Sorry to hear that.
She just let me know this morning.
Keeping her germs at home. So any questions before we move on to the next agenda item from the group that's assembled around the table? Okay, not seeing any questions. We will move along to reports and action items, and we get to start out with the Economic Development Strategic Plan Annual Update. I'll start with Director Hinkle. Do you want to watch that?
Yeah, so just kicking this off, Stacy will actually be presenting for staff on this one. So this was a follow-up from the council adopted economic strategy plan. As you recall, there are key items that the council has targeted for the city in terms of implementation. Really today's highlight overview of kind of where we're at in that plan. It's kind of getting to that point where we've made a lot of where we started and where we're at today. So I think it's really key to kind of understand the progress made, but then also what opportunities do lie for us. And there's always kind of an evolving kind of shift and change. One thing that really, we adopted the plan, we're coming out of COVID. So really the kind of the change agent related to office conversion, housing development, we're still not there, but we're starting to see a lot of the signs of kind of the recovery and investment back into Santa Fe. But with that, I'll turn it over to Stacy to kind of cover the highlight end.
Great. Thank you, Micah. Again, my name is Stacy Lauman, Economic Development Program Manager here at the City of Santa Fe. We have about 13 slides today and 20 minutes, so I'll take about 10 minutes or so to run through them, hopefully, and then we can have a little discussion afterward. The focus of this presentation is really about our accomplishments in 2025. So just as a reminder, the strategic plan was adopted in May of 2023, and it's a 5-year plan. And robust community surveys in the business community, in developing the plan and also some data-driven analysis about where the city was going economically. So the plan has 31 program tasks organized in these 7 areas. And last year, we were able to align the 3-year strategic plan work plan with a lot of the work that's ongoing here in the economic development strategic plan, particularly for the 3-year strategic plan. You'll see these items in work plan area A, which is the economic and neighborhood vitality section, and also a little bit in work plan area F about high performing government. This is just showing where we are year over year progress with the 31 items, and also where we've made some progress in the strategic areas and where we have ongoing need to continue to implement. So the top table there shows in 2023, most of the tasks were not implemented. You could see a starting trend to move in 2024, more toward implementation. And now in 2025, you'll see that we've implemented about 20 tasks out of the 31, and we're continuing to develop more. There are a couple areas that we've made significant headway. Those are in the areas of support businesses and development, primarily through the GO program, strengthening local partnerships, and also outreach for private businesses and in development. And the areas where we are looking for future implementation is around analyze implementation. It's section 3, which says analyze the EIFD, which is a tax financing tool. I think we could look at that more broadly to how do we bring in infrastructure dollars to the city in general. And then the other area that we have some work to do is on attracting high-tech industrial uses. And we'll talk about where we might go with that a little bit later.
Well, actually, I'll just add on that. And if you look over overall chart, the one area that is targeted is really that industrial component. I think we were targeting at the time was moving the Southeast Santa Fe specific plan forward. That would actually look at analyze some of the industrial zones we have, kind of set up really new modified zoning or industrial regulations that really can kind of help push that type of land use a little bit further. But with the delay in actually the granting from that, that's why there's been a little delay for that timing for that to come through. But for the most part, we've actually made a lot of that progress. I am excited to say that we are looking to kick off with the council's recent approval of the contract for the consultants for the Southeast specific plan. So we really start to actually analyze where the land use is. I do think there's a lot of opportunity. It also does bleed in a little bit to the presentation that Alexis is going to give later on the OZ for opportunities. And Stacey, can we make that any bigger? I'm like, it's tiny. It's so bad. Look at that. I'm like, I don't know. I'm like, outside. I'm like, I just can't.
Sure, I know. That's okay. Just read the highlights.
Take the moment. I just can't read it.
Looks great on my screen. So here are some major accomplishments. In 2025, we have continued to activate the San Rafael Go program, which provides business support. Over this past calendar year, I received about 25 or interacted with 25 businesses that were actively looking to pursue a site, a project, something here in San Rafael. And these were inquiries that were more than just, hey, how might I do this? These were like very tangible. Can you help me? I'm trying to get through the permit process kind of questions. One challenge in tracking the GO program is that inquiries come in from all sides. So I catch what comes through my door, but I don't necessarily catch those that are at the front counter or those that may come through our partners like Karen or those that come from other areas or things that go to the mayor's office, et cetera. So we're trying to aggregate as much of the information as possible, but I know that there's a lot of interest and activity in San Rafael right now. Another accomplishment that we completed in 2025 was providing a couple economic incentives. One of them was with the cannabis program. We offered a 2-year reduction in taxes for the delivery businesses to help them with their financial sustainability. The other program is that we offered a 2-year reduction in fees for streetery programs. I'm happy to say that currently there are 4 streeteries in downtown San Rafael. All 4 of them are with active permits. That was a major milestone to accomplish last year. With our mobile vending ordinance, mobile vending in the city, there were a lot of state law changes that effectuated changes in how we regulate and support entrepreneurs that are looking to do mobile vending. So we've launched a mobile vending program and have some tools and resources that were very recently implemented here on the city's website, and that information is getting out into the public now. We were able to transfer the administration of our events to the Community and Economic Development Division. This is an effort to sort of support businesses and streamline how we engage with event producers in the city for a more cohesive and robust collaboration. We've also done a lot around arts programming. As you know, we are in the final year of a very large grant from the California Arts Council that identified San Rafael as a major one of the 24 California cultural districts in the state of California. So we're launching a public art program on city public property. You will also see some public art on private property popping up in the next month or so when it's not raining anymore. And then we are also in our final year of that grant. And so we'll be looking to wrap that up at the end of this fiscal year. Finally, we have done some looking at our sales tax, and we were able to host consultants from HDL who provide sales tax analysis and support for the city to analyze where are we with sales tax, what are our strengths, where are our growth areas, where should we be focusing our energies and strategies and policies going forward. On the development side, this has really been a catalytic year for the city of San Rafael in terms of development, really unprecedented residential developments. Currently within our sort of various stages of planning review, building review, there are 18 major projects that are on the docket for development across San Rafael. I've highlighted 3 here just as examples of that. Well, the first one is 800 Mission. This is the Aegis Living senior facility that opened in 2025. It provides 101 senior units, also, as we know, like really needed housing type in our community. The property tax impact of that is 300-fold from what the prior property tax was to the current property tax base. So in this example, I'm illustrating that these kinds of developments are good for the community in that they're providing housing, but they are also a revenue generator for the city to support our services. The second example at 930 Irwin, a development called Madera. This will be 210 apartments. It broke ground most recently, like at the very end of December, and it anticipates opening in 2028. When I was talking with our building division, we were trying to assess what is the value of all of the development that's happening in San Rafael. And right now, we don't have numbers from every single development as to what their development total cost is or what is the value that they're bringing to the city. But looking at construction valuation, their construction valuation for this project was $42 million. So we can extrapolate that relates to about $60 million in total investment in our city. And similarly, at 703 3rd Street, another apartment building is going up there, slightly smaller in size, breaking ground in 2026. We anticipate through their construction valuation of $24 million that project is probably an over $40 million project. So with this, with Northgate, we're looking at over $500 million of investment in San Rafael in development.
I'm sorry, that's within the next 3 or 5 years kind of projection?
Yes, depending on when these developers choose to pull permits and move forward with construction.
Even for those construction valuations, I actually anticipate them to be a little higher. A lot of times they've been breaking up their permits. Like this valuation is based on the superstructure, but then there's another permit that'll come in for the actual housing development. So there's a big valuation, but these are big critical pieces like those kickoff parts for the superstructures. That's all the concrete work, right? The foundational pieces, but then they'll add another later. So as I said, easily these projects are over $100 million a piece. So.
Then in the retail space, we're seeing a lot of consistency, and I wouldn't say a ton of growth. We have had some great new national brands come in. Polestar will open up a dealership on Francisco Boulevard, which is great. We saw a re-tenanting of a property over on West Francisco for Five Below, and Wingstop as well has come into Marin Square. So those are 3 national brands that have decided to locate here. And on the local brand side, we've seen a lot of re-tenanting of existing properties, particularly on 4th Street. Here's a list of them. The Burren House, Burren Live is under construction now to create a live venue next door. There are a couple pizzerias, breweries, and another bakery is coming into town. All of these are taking existing retail spaces that were recently vacated by other very popular restaurants, et cetera. So I'm happy to see that those spaces were quickly re-tenanted and are coming soon, if not already open. So I've pulled out like just 3 primary indicators to discuss today. They are total taxable sales, the assessed value of commercial properties, and tourism revenue. So for sales tax, what we're seeing over time, unfortunately, we don't have 2025 numbers in, but we're seeing sort of a steady trajectory upward. Hopefully, I know there was a little dip in 2024, but hopefully we'll see a continued increase in sales tax revenue over time. When we're talking about property values, we look at commercial and industrial property to see what is the uptake in these properties. Is there a strong market for use of these properties and ownership going forward? So we found that for commercial property, the value of transactions has gone up a little bit, 5.7%, and industrial properties, that's also gone up by 4.2% or so. And so what this tells us is that our commercial and industrial property values are holding, if not growing, in value.
The one thing I do want to caution or kind of call out for everybody, though, is about conversion of those lands for commercial lands and industrial lands to housing. We're starting to see that happen for a few of our locations. There's a different tax base that comes into play, but that also is you're trying to like balance your bedroom community versus your jobs generators. So this is one of those things for us to watch as we kind of look through the cycles. The hard part is we have a lot of older office assets. So I have some newer office assets. They're just not renting at all. So as those property owners are trying to figure out their, financial returns on their investments, they are converting those to housing. So, but then we lose those, job generators or commercial assets. Now they become housing assets. They're good. We need them. But then there's also a balance because there's only so many industrial and commercial spaces a community has. So that's always trying to look at those from a balanced lens of like, that's great. I love to see it, but sometimes you need to protect some of those other areas.
Well, I just had a comment, maybe backing up to the sales tax chart. So generally, we're actually seeing a little bit continued modest growth. We had another quarterly update with our HDL sales tax consultants, and I would just share that underlying the most recent data is generally a softening of taxable sales and retail sales locally, regionally, and within the state. We're seeing that across the board. What is unusual about San Rafael from a comparative basis is our auto sector is outperforming that sector even elsewhere and statewide. And so it looks on aggregate like, hey, sales tax is hanging in there, but it is almost exclusively tied to very strong activity in our auto sector. So not something that is projected to just continue. So I'm watching that pretty closely. Yeah.
And then the key metric, the third metric I pulled out was the tourism related revenue and activity. And so there are 2 types of taxes that are levied on hotel stays. One of them is the TOT, Transit Occupancy Tax, and that's 10% for all hotel stays. And what we saw in 2025 was that the city received revenue of $3.5 million from the transit occupancy tax, and that was relatively stable. In the chart on the left, you can see with relatively no growth in that number from year over year. However, one thing I found that was interesting, the table on the right shows that this green line is visitations, and you see it really drop during COVID, and then it bounced back, but it didn't seem to bounce back to the level that it was previously. However, the hotel night rent, or the cost of a hotel night, has kind of remained stable. So I think one opportunity there is to look at our tourism sector, figure out how to really continue to market San Rafael. We can and should be a destination for Marin County as a whole. And so just by growing that visitation line a little bit more, I think we could see a lot of positive benefits from that.
And on the TOT transactionals, it's really, our new hotel really kind of helped balance those. So there wasn't really a loss in that, even though it was a dip. The ADR is kind of balanced from there. I will say though, the investment that was really is the 4 Points. So 4 Points actually was acquired over the last year. They've actually been remodeling that. So it's going to more of a boutique line. So actually some of those will gain a little bit because it's really a nicer hotel product. So it's nice to see those kind of strategic investments, particularly for an older property like 4 Points, and then that hotel ownership.
And we have seen some little bit of growth in that. Just previewing ahead, in March, council will get a mid-year budget update. I think we have TOT projected this year at about 3.9 million, in part because of the newer hotel that's popped up. And so that's.
I just wanted to also add, with the Super Bowl and with World Cup soccer being up here, I think those are opportunities to leverage. Someone was telling me that Bad Bunny was at Soul Food or something.
No, it's from 2022.
Those we do, or I think with the World Cup, so I think there's opportunity how we can kind of bring in some of that tax dollar here.
Thank you. And then the other tax that's levied on hotel stays is the 2% tourism BID tax, and that goes to the San Rafael or the Marin Convention Visitors Bureau. And San Rafael provides about 43% of the total hotel stay revenue to that organization and TBID. So in 2024, I don't have the current numbers. That I know that the Marin CVB annual report is coming out very soon at the Marin County Board of Supervisors, but the 2024 number from San Rafael was about $736,000. Looking forward, here, I'm sorry, this is hard to read also, but I'll just tell you that we are in alignment with the 3-year strategic plan to implement some what I think are quite exciting programs. We'll continue to leverage and activate the GO program and continue to make outreach to brokers in particular to really connect with brokers and businesses on the front end of their work. We'll continue to market San Rafael to increase visibility, both for the tourism purposes, for creative economy purposes, and for events promotion purposes. I think there's a lot of work that's queued up to work around the tourism space with the County of Marin and with other partners. Beautification is on a good trajectory to move forward. We'll hear a little bit from Priya Nixon here in a minute about some gateway improvements at the 2nd and Irwin location. Department of Public Works has been working heavily on a 2nd and 4th Street pedestrian improvement for the other side, for the west side of 4th Street. And of course, over on Bellum, there was a pedestrian improvement that was just at that intersection. And then of course, TAM is looking at a larger multimodal project for improving that gateway as well. Arts programming will continue to bloom in 2026 with the culmination of the public art program. We are also continuing to work on affordable housing, and particularly supporting the development of a city-owned property at 519 4th Street for affordable housing. And then lastly, resource collaboration. It's really nice to have engaged community partners. Some of you are here today, thank you. So I think we could really look to our partners in the community to do things particularly around workforce development, around business education, around resources with financial resources in the business market, small business loans, et cetera. So we appreciate the resource collaboration in the community. And then the last thing we're looking to do is activate an Urban Land Institute Technical Assistance Panel to really look at where are people thinking about downtown right now? What is our vision for downtown and how can we coalesce around a common concept and then move forward some initiatives in the future related to that? So opportunities and challenges. The development pipeline is a great opportunity, also a challenge. We'll continue to provide high-tech customer service. I think I already talked about the three-year strategic plan and working through these two areas, which are economic vitality and high-performing government. And then the cross-departmental collaboration I just talked about a little bit. And I think our challenges have, again, of course, to do with capacity and the resources to deliver. We are looking at a slight budget deficit, as Paul has mentioned in previous presentations to City Council, but we are working with what we have. We have a great team internally to implement the programs that we do have on our work plan. And we'll look to maximize how we can leverage our partners and the resources that we are working on currently with the plan. And that concludes my presentation.
Fantastic. I love how you put so much information in just 13 slides. That was amazing. Questions, Councilmember Hill?
Yes, thank you for that presentation. That was super helpful. On the, I noted a couple of things. So on office space that is vacant, at least in my limited imagination, there's two directions that owners of those assets can go. They can say, do I let it, or maybe more than two? Do I let it go and sell it at a loss? Do I wait it out until things change in the macroeconomic or local economic, or do I contemplate a conversion? All of them seem challenging to work with that. So I'm curious if there's anything at this point staff would comment about that, look at a little bit further, or is that pending some more look at how that would go?
It's a great question, and it really is. It kind of speaks to like the holders of those assets. What I do find is there's kind of two different levels. You have a lot of longtime owners, like they've owned that assets since like the 60s, or if not sooner. And what I'm finding is you're typically looking. There was like an investment wise, it was an automatic return for them for many years. They've done well with those. But they're also not in a position to want to reposition those themselves. Like they don't want to take on that task of redeveloping it to housing or demo it or do some other type of use. So what they've been doing instead is selling them. So they've been actually put on the market for the first time in a long time. So I'm starting to see that kind of happen. The other ones are actually more investor grade kind of acquisitions where they have a big real estate trust or some of the piece, and they're always trying to look at the maximum value of those type of office complexes. And for those have actually the ones that have been really kind of seeing change hands, or lending wise, looking at like they're taking a loss because they don't have the revenue to kind of keep those office assets going. So that once again, they're either like bank transaction sales, like because they don't meet their obligations on the financial end. So it's kind of repositioning those assets for a new buyer to actually either release it at a certain level or kind of change the I guess equity value in that property to a lower basis, so they don't have to charge premium rents, because we've kind of seen that they can charge a lower, more market driven rent because that's what it'll accomplish, or they'll reposition it to another land use. So that's the type of things we've seen in the kind of office world, and it's been interesting because we have actually really good assets. For me, is Autodesk and some of those assets on there. They're contemplating those type of questions. These are actually newer office buildings. There just is not a market. The market for that product does not exist. They've actually, we may have to bring in a real estate broker at some point to kind of talk about this later, about what's happening to the market, as a lot of times the offices are going to better product, like look closer to where they want to be.
Gotcha. Thank you. And then just thank you for that. And then as far as tasks, just to check in, are there any of the tasks that are in terms of what we've learned that we would either deprioritize or delist, or even emerging ones that we would say fit within the strategic framework but are not on the list currently?
I think it's really been in that opportunity as part of the council's move towards the council work program and the council strategy. We've actually did a lot of alignment within that, looking at, because the economic strategic plan was done beforehand. So then trying to align that to what resources we have. So I actually think we've already identified a lot of those, of like where they land on the priority end. I think what Stacy kind of speaks to also is we've been able to actually deliver a lot of things that were targeted for years out. Like this was a year 5 thing, but we actually got moved up just because we're able to accomplish it, just given our standard work tasks. So there's been a lot of progress made on that end, but it looks like Paul has.
For your question, one item at least that we've been tracking, I'd be responsive to your question. Stacy mentioned it, is the staff and consultant analysis of the EIFD, the Infrastructure Financing District. That was sort of like the goal. And as Stacy noted, I think going forward, we're going to be looking at that more broadly in terms of like the whole universe of financing tools available for infrastructure. I don't know if it came to this committee, but for the benefit of the preliminary analysis of the EIFD, which is basically a little mini RDA replacement tax increment financing, is really challenged for San Rafael for a couple of reasons. The main one being the city retains a very small share of the overall property tax, like about 12%. And so you don't get a lot, it needs a lot of development to generate a modest amount of tax increment. And that's growth in investment. So your base is locked in. And so how much incremental property tax revenue is going to generate what tax increment? The key to the communities though that have made those work, 2 things. One, generally a higher property tax share, which nothing we can really do about. But the other piece is partnering with the county because the county gets the lion's share. And my understanding is that the city did not make a lot of headways in the recent past in trying to get the county to collaborate on this. But with the current county administrator and their interest generally in economic development, I think there's an opportunity, and folks have identified an opportunity to kind of revisit that with the county. So there may be a refreshed look at the EIFDs in that context.
Thank you. And that connects me to the last one. It's not really a question, but thank you for highlighting the 2024 figure for of $736K. And just to remind folks, that is about, it's about $750,000 if we were able to recover that in 100%. Even if we recovered it partially, my belief is that we can reinvest those funds to help with making San Rafael a destination and make certain that those funds get reinvested in the community, which is generating that.
You're talking about the BID, TOT.
Yeah, the TOT.
So I had a question on that. What steps would the city need to take to have 100% of that money and then go back and renegotiate with the county as opposed to staying where we are now and negotiating, saying, okay, we're going to bring it all back in-house and then negotiate? Does that make sense? Because this has been literally, I think I've mentioned this for over a decade.
So I think it's a little.
I don't know what the process is because I think there's probably, and I don't want to get in the weeds, but
Sure.
I imagine maybe the question is are there legal and it's not just we want the money back, but there are other little mechanisms that we would have to unwind or work with.
Agree. And just so you know, like its framework of like, well, how does this, how does the tourism improvement district, like fund itself? What's this about? It actually operates under the same legislation as our downtown BID. So the county is the lead for that. So every year there's an annual report, and then there is an opportunity for majority protest at that time or look to adjust that. The only thing I've actually unwound a couple of these in my career. The one thing you really need to have set up though is what are you going to do in its place? So because if you don't levy that particular tax, then it's just basically scattered back into the recipients. But you kind of almost have to have structure in its place to know what you're going to do about it. So sometimes it's easier to actually work with the organization to say, hey, maybe it's just a strategy change or a readjustment of priorities. These are these older formats to say that they're not really working for us now. So really trying to at least provide that opportunity to make those adjustments. If not, you can look to actually unwind or not participate.
Thank you. Yeah.
I think another flavor of that, rather than getting San Rafael dollars back, as Director Engel said, it's really looking at where is the return on investment in dollars invested in tourism and visitation. And generally speaking, the countywide Convention Visitors Bureau has a role. But if you put all your eggs in that basket, it gets really diluted, right, in terms of back to us. So it's really more of not just, is it this model or is it another model? It's I think probably looking at tweaking it so that there's at least some local control over how those dollars get allocated for direct return. But conversations to be had.
Yeah, just follow up on that.
Yeah.
So I know the county is doing their work around the economic vitality, and I have confirmed with the supervisors, I'll be on that committee as well, so I'll have literally a seat at the table. Yeah, let's open it up for comments before we move to the next agenda item. Go ahead, Karen.
I would love to highlight the presentation that the Visitors Bureau did when Mark Essman was the CEO, and that was in September of 2024, where they walked through their budget a little bit and demonstrated how they were using dollars. The one thing to the bigger bucket, the allocation isn't a one-to-one return on investment, as you just mentioned. So a lot of what my understanding is, a lot of those dollars that San Rafael is investing are going to support tourism in West Marin, for example, or hanging banners in Oakland to bring people to West Marin. So yeah, I definitely think there could be some Tetrising done, but the other piece is when Micah, when you ask questions about who's going to take this on or what does this look like, it would be far more affordable and incentivized to bring in a tourism expert or a tourism consultant to build something out locally. And then if whatever shakes out at the county level, if the city wants to reinvest that way, great. But in the meantime, we need these dollars to be back in our community to support our businesses, et cetera. The tourism, the hotels, all of it. And when I talk to our hotels here locally, they're not very supported by the Visitors Bureau. There are a couple who are. They also happen to sit on the board. So there's an inequitable level of support for the hotels that do exist here. So just
Thank you. Yeah.
I work part-time for the Petaluma Downtown Association, and the Petaluma Downtown Association manages Visit Petaluma. I highly recommend everyone to go to their website because they have taken the TOT money from Sonoma County Tourism and put it directly into Petaluma. The downtown benefits from it. There's an annual magazine. The businesses absolutely love it. If you go to their social media and see what they can do with that money, it is absolutely fantastic. In our visitor center, we have a ton of staff, and their only job is to promote Petaluma and the businesses. And it's amazing. It's a really good resource. And it's a great model.
Thank you. Any other questions or comments from the group before we go to the next item? And to be clear, we could talk about this item alone for an entire hour. So I don't want to say short shrift it because it's not weighty and important. It is. And there's so many other things on here that are super weighty and important. That's maybe we're all. Okay. Thank you so much, Stacey. That was great. And I would love to have that presentation so I can email it out to people because
Absolutely.
there was a lot of information there. Okay, fantastic. So switching gears, but always related, our next agenda item is the Opportunity Zone designation process. And I know that Director Hinkle already said that Alexis is going to take this over. Is that correct? Is there any setup needed?
No,
Right.
this is our own
Okay.
setup, and that's what
Okay.
Alexis said.
Alexis, here you go.
Thank you, and good morning again, everyone. I'm here to talk, I'm going to talk really briefly because I know we're tight on time about the sort of an emerging work plan item, which is the 2026 Opportunity Zone designation process. If you could go to the next slide. So just a really brief recap. Opportunity zones are federal tax incentives to encourage private investment long-term in low-income communities. You can go to the next slide. And really high level, how it works is when investors sell an asset, they can put their capital gains into a qualified opportunity fund. And then those are funneled into a qualified opportunity zone property, either directly or indirectly. And the sort of list of qualifying activities is really broad. It does include acquisition of real estate and multifamily rehabs, which we've seen quite a lot of overall nationwide as a use for these opportunity zones. You can go to the next slide. So when this was established in 2017 through the Tax Cuts and Jobs Act, one of the thousands of census tracts designated across the US was actually in the San Rafael Canal. It's shown on the map here in green. This has been an opportunity zone from 2018, and it will be at least through December 31st of this year. One of, I think, the big questions everyone has is, what happened? How much OZ activity was there in this tract? And I'm sorry to say that the Treasury did not publish detailed census tract level data. So we actually don't know how much investment that first round of designations attracted and where. What we're here to talk about today is the next round, as this program has been extended permanently. And I'm happy to say that data collection and reporting requirements are looking much more robust for this next version. However, I do want to say that this city council, you can go to the next slide, took action on a couple of policies in the city of San Rafael, specifically focused on the OZ, that both of which were focused on preventing potential displacement, particularly of residential tenants. One of those is the Permanent Relocation Assistance Ordinance established in 2021 that provides an increased payment for tenants who might be displaced by substantial rehabilitation, which could be, we could see more of that, right, in Opportunity Zone where there's heightened incentive for investors. And then the council came back in 2024 with an urgency ordinance that eliminated substantial rehabilitation as a cause for eviction and instead required temporary relocation of tenants. That is set to expire on December 31st of this year. You can go to the next slide. So what we're here to talk about is the designation process and how it's changed since the last time. That will be happening this year. Thank you. So now it is a permanent program. Designations last for 10 years and they cannot be revised once they're set. What we're seeing is tightened eligibility criteria this time around. And what that means is that we're going to see less, we're expecting to see significantly less OZ census tracts in California. So in other words, it is getting more competitive. You can go to the next slide. This is just a high-level timeline. So again, last July, the One Big Beautiful Bill Act passed. OZs were made permanent. We are expecting the official list of eligible census tracts to be released by the Treasury this month. And then July 1st of this year, governors will have 90 days to nominate census tracts for OZ status. So they send their nominations by September 29th to the US Treasury. The Treasury certifies those, which is expected to happen by the end of November, and then new designations will go into effect January 1st. You can go to the next slide. We don't have that official list yet, but we are expecting several eligible census tracts. This is a view of Marin overall. We're going to zoom in on the next slide. But this is projected based on the most recent American Community Survey data. You can see that there's tracts expected in Novato and Marin City, but also a large spot in San Rafael. You can go to the next slide. So this is a zoom in on San Rafael. We are expecting there to be 5 census tracts eligible. Again, this is not the official list yet. This is just projected. You can see that both of the 2 smaller primarily residential census tracts in the Opportunity Zone are included, as well as the larger industrial commercial tract. We also have Bret Harte and the downtown census tracts included. So we will be looking out for the official designations or the official list from the Treasury. But really one of the reasons, you can go to the next slide, that we're here today is because California, the state of California, we don't have a ton of details yet, but they are telling us that they're going to do things a little bit differently this time around. Last time, they took the eligible list and they picked census tracts, right? This time they're saying, we would like to open a nomination portal and we would like localities that would like a census tract, an eligible census tract designated to nominate and advocate for why they should be designated. So we don't have the exact timeline yet. I heard a state official float like June 1 as perhaps the opening of that nomination. But just my last slide, you can go ahead to the next one. Wanted to bring this emerging work plan item to the subcommittee about staff analysis of eligible census tracts and engaging local stakeholders to determine which census tracts, if any, the city would like to nominate through the state of California's process for federal designation as an opportunity zone. I will stop there so we can get into some discussion. Thank you.
Thank you, Alexis. So what would be a council action that would be required to have it be selected or nominated? Or does it not need to go through a formal process, public process?
We are trying to get more information on that. I'm not sure yet if it will be a resolution needed. I might imagine.
I think it might be important whether it's required or not, because it does enable the public to have the conversation about it. And being that the rules have changed, so I don't know if the timing, if we have to get that to California by September, back it up August. I mean, there is some time, but not a ton of
Yeah,
time.
and I think that's why we wanted to bring it forward to the
Yeah.
committee, just to, as it's an emerging item that actually has not been solidified through the process. But as soon as it is, that we'll probably have to move quickly if we want to utilize it. So, and then I know that I did meet with Omar, and the Canal Alliance has had some interest in exploring this. But also, if you look at the parameters of like location where we're projecting, is also the same area as the Southeast Santa Fe specific plan. So like there is some, convergence of opportunity as we kind of look at like where we're going. The hard part is timing wise. Like we'd love to have the plan and all these things. We spend a lot of time and effort like visioning what this is. Well, they're not in place yet. And the OZ, from my perspective, is kind of had a mixed bag in terms of its outcomes and targeted efforts. But it is a economic development tool that the federal government offered. So as I said, we should still evaluate it.
Okay, so to that timing, and again, I'm hearing that the process is still unknown, that even if we don't hit the September timeline, that maybe there's still a rolling opportunity that you can renominate, or, I mean, if it's a permanent program.
Just to be clear, so the governor will have 90 days starting July 1st. So at that point, it's in the governor's hands. I think our opportunity to sort of advocate is going to come before that. So it will come early summer.
Correct.
And then it's locked once the Treasury decides in late November, it is locked for 10 years.
Oh, for 10 years, I thought it was permanent. And just again, something to comment on, we did, and you talked about this, we tied some pretty critical city policies to the OZ. So I just put out there that as we have this conversation, those should be bifurcated. They're two different conversations. We did, for many, many good reasons, put them together. But as we go forward, I really want to have those conversations separated. Yeah, go ahead.
Yeah, I mean, my comment, which will turn into a question, is that I would characterize the opportunity zone for how it is operated in this community as both extractive and displacing. And we've had to do a lot of mitigations to work through that. Obviously, I think it's important for us to understand the contours of, I'll say, the rules of the game, just to put it in context, to say, what is our approach this time? What are consequences to potentially not nominating or expanding nomination? I would just say at minimum, it's been problematic. The opportunity zone overlay in our community has been extremely disruptive.
Thank you. Great comments. I know there might be folks that want to comment on this item. Yeah, go ahead, Omar.
Well, thank you. I think that's exactly what we would love for the city of San Rafael to lead the conversation locally with key stakeholders to understand pros and cons of it. I do think that the city of San Rafael has major challenges around sea level rise. Take a dealers, is that going to be forever, right? Or this is the opportunity for us to be thinking about what is this, how can we diversify our economic engine in San Rafael? And if so, what is the tool that we can use to approach that? And the answer might be, no, this is not a viable option for us. But I think really locally spending some time collectively to assess that and understand the pros and cons about what it would lose if we choose to move the designation to another census tract. Or if we want to maintain it there, how can we actually take advantage of it? They bring benefits to both the capital and the community. So that's, I think, what we are interested in exploring how this would look. There are models across the country where communities have come together to do that and being able to reduce the risk to capital to meet the needs and the priorities of the city, right? I think that is the precise plan the city is doing right now. It's going to put in a very good position for us to do that. So anyway.
Other comments or thoughts on this item? I would just add, this is an emerging item. You've said that, and this council has been very clear that we're not just piling on staff work plan. So as part of this conversation, And really for Director Navasio, when we come back, like what might have a longer or different timeline, because this one has come forward as a more immediate. This is not just a pile on more, because there's a time constraint, like we say, it's coming up an urgency part to it. Okay. Fantastic. Thank you for all your work on this. We look forward to hearing more about the process. And if we can be helpful at the state level, reaching out to our state electeds because we need more information or something stuck or whatever that might be, we are at your pleasure. So, okay.
Thank you.
Thank you. All right, so our next item is the below market rate housing program update. And welcome, Jeff.
Hey, thank you. What an honor it is to be here in my favorite city in Marin. And also you guys allocated me 25 minutes in this very important meeting, so also double on it. But my name's Jeff, and I guess.
But you only get 20 minutes of it, so.
Okay. Keep it to 15. But anyway, so my name's Jeff. I'm with the homeownership program manager at Marin Housing, and I work with you guys on managing your inclusionary ordinance and your BMR portfolio. And this is just a quick geographic distribution of the units. The dark blue is rental complexes. Light blue are some of the homeownership units. So yeah, next slide. And just really high level overview, about 4% of your housing stock is part of BMR portfolio, whether it be through the inclusionary requirement that developers met or through some city funding or partnership with some nonprofit partners. And just some of our objectives are, of course, to increase that 4% number as much as we can, promote diversity and inclusion in the communities through income level, housing mix, and age and household size. And then to make sure that the housing that is there is up to the same standards as market rate housing. Go to the next slide. You guys actually have one of the longest standing BMR programs, started back in the 1980s, became mandatory by 1990. It was really refined through 1990 to the 2008. And then obviously 2008 changed everything. The development pipeline dried up. We switched into really more of a preservation mode, dealing with a lot of predatory lending. We litigated on behalf of a lot of homeowners that got into bad loans, prevented foreclosure, really invested in home buyer education. And then really the last, 5 years have been quite chaotic with the pandemics, inflation, interest rates increasing. So that's really just been us providing some continuity. And next slide. Well, this just kind of illustrates that point even more. Essentially, the cost of owning a house has dramatically outpaced both household incomes, which is shown on this top graph. Blue lines kind of show that there's been a sharp increase since late 2021, early 2022. And then the bottom shows that rents have also held pretty stable. So it's also outpaced rents. The major reasons are higher interest rates, HOA dues, and them dealing with deferred maintenance, and insurance has been another big cost, and then also just the cost of construction and rehab has been another major thing to manage, just because much of the portfolio is over 20 years old at this point. So we'll go to the next slide. In recent years, we have sort of adapted to our aging stock, mainly by doubling down on engaging with the homeowners early before the resale process, making sure that we give them all the technical and financial assistance they need to address any deferred maintenance. We've also had sort of a shrinking buyer pool. Historically, we were much more focused on trying to get low-income households into some of these homes. With the interest rates, insurance, and HOA dues increasing over the last couple of years, that the opportunity for low-income households for home ownership has really, really shrunk. So we've done a lot to structure the resales in a way where all the costs of commissions, any inspection reports, rehab costs, all that stuff is baked into the price. So they're getting essentially financing as much of those costs as possible. So it makes it so that they're not having to bring as much cash to the table. And then, of course, providing things like down payment assistance for buyers, and then just kind of a broad term of we're really looking at modernizing the resale and lottery selection process. The program dates back 40 years. It's had certain evolutions, and there's certainly opportunities to, adapt it to a new future and the new reality we all live in. So I'll go a little bit into our rental program. There's 781 units, 228 of them are for-profit managed through the inclusionary requirement. The remainder are through your guys' partnership with nonprofits, whether it be through funding. The vast majority of them are focused on low-income households and very low-income households, with a small subset being moderate income. The rents range from $2,000 to $4,000, depending on where you fall in that income spectrum. Go to the next. We do have units coming online. The state density bonus is the major player in today's world. So the vast majority of these units are entitled through that state density bonus. The vast majority of these are going to be low income, which is 50% AMI to 80% AMI. So it's 231 total. Go again. This is just a brief look at what the work that we do with the rental portfolio. The bulk of the work is in monitoring. This little spreadsheet is the sheet that we send out to all the 42 different complexes to get information about the units that are below market rate, who's in them, what's the income level, so that we can check to make sure that the households are income appropriate and that the rents are appropriate. We also do administrative things like calculating the income levels annually, and then calculating the maximum rent, distributing those rent schedules, and then also providing any interested renters, folks looking for a place to live with a list of some of these properties so they know where to look. And then we'll go to the next slide. And then we'll unpack our ownership portfolio. So we have 111 units currently across 22 complexes. And then in contrast to the rental portfolio, 2 and 3 bedrooms. Thanks for the clicking. And then, so the program documents have evolved over the years. In the 1990s, they were just 30-year terms. They were set to expire after 30 years. So we have 15 of those units coming up in the next 5-year period that are set to expire with those 30-year terms. 56 of those then came after the 2000s, and those were 40 and 50-year terms. So those are much more likely that they may outlive the occupant or their tenancy. So there's a good chance that we should be able to preserve most of those 56. And then there's 40 units that after the 2010s, they started becoming into perpetuity. So the remainder, and now when we resell units, everything, all the restrictions have a perpetuity term. And this just shows a little of the drop off. I think I had a little typo, but all of the expiring units are 120% AMI units. So we're not going to lose any low income units. So we have a drop off of 15 in the next few years. We'll go to the next slide. And then same here, just showing a little bit of the drop off. The blue line is where we're at, and the green line is where we're headed at by 2030. So there's just a drop off in 2 and 3 bedrooms. But we do have, in recent years, the expirations have outpaced the development of new units. In the 2022 to 2025 period that I've been in this position, we've only added 1 unit to the portfolio, but we've lost 12. However, we do have some newly entitled units. So we do have 15 that are in the pipeline, which is good. And they're a mix of bedrooms. I know the 3 and 4 bedrooms are very important because that's, having for the larger families, that seems to be one of the, missing pieces in the housing stock is affordable housings with 2 and especially 4 bedrooms. And then these are 5-year chunks just to kind of show the development history of the BMR portfolio. So like 1985 to 1990, we had a little over 25 units through a couple complexes. The 1990s through 2005, and 2005 was a really big year. We had a couple large developments that came online in San Rafael. And then 2005 through 2010, things died off. We had, I think, 1 development and an extra unit in 2015. And then, we had our extra, I think we had 2 units through 2020 to 2025. Just kind of a really quick summary of the work that we do. And we start with developers. So we work with the city staff, and Alexis has been an amazing partner. but we work with developers on giving them the pricing, so help them with their pro formas to understand how this fits in their financial picture early on. We provide templates for the developer agreements that have been utilized. And then, of course, we handle the sales with the developer. So we have a process of essentially we have all the program, applications, forms, flyers, marketing. We work with a list of vendors. So we work with BMR approved lenders, real estate agents, and we have contractors that we help folks with the rehabbing their loan. And I'll also add to our restriction documents that we also have for the homeowners. My feedback that I've gotten from lenders is that they are lender friendly. So that's another added benefit to help homeowners get or future home buyers get financing is they're simple, they're effective. We don't have any issues with we don't have too many enforcement issues in your portfolio. Actually, right now you guys have none, so that's good. I have the other jurisdictions I have problems with, but not San Rafael. But we use all the same support or the same documents. But and then we do everything from calculating prices and servicing. So if they want to refinance, if they want to put their property into a trust, if they make capital improvements to their property, these are all things that we essentially need to facilitate, make sure it's done properly, and we give folks credit for the investments that they make in their property. And then, of course, we're annually monitoring them to make sure that the owners still occupy them, and so on. Go through. This is a quick overview of like the buyer side application process. So essentially, they're going to be joining an opportunity email list to get notified of any BMRs when they come available. The first thing I always recommend folks to do is go talk to a lender and see what you can afford. It's a first-time homebuyer requirement that we have on our portfolio, so they have to get a certificate that shows that they've completed a course. And then once a unit comes that they want, essentially they will submit a full offer package demonstrating that they're ready to buy. We'll pre-qualify them to make sure they're eligible, and then we'll do a lottery from those that applied and are eligible. A little overview of the demographics of our portfolio, and essentially just the long takeaway is that our portfolio is at least more diverse than the county as a whole when compared to the census, the 2021 ACS 5-year estimates. That's just kind of the high level takeaway there. This is a survey I did back in 2023. I surveyed the portfolio. We got about a 40% response rate, which was good. And a thing I like to note is that the 66% of our respondents were seniors. So it's not only are our units aging, but the occupants are also aging. So this is a lot of the work that we do is when the units do turn over, it's usually because it's a senior that can either no longer live in the home or maybe has passed away already. So there's usually quite a bit of deferred maintenance and a lot of hand-holding that has to go through that resale process. And here's some example of some of the sales that we've done. These are two complexes in your portfolio. The top is the Capri complex. That's at the very northern edge of San Rafael overlooking the wetlands. And then we have the Redwood Village, which is northern San Rafael across the street from the Civic Center. Lovely homes. So essentially these are just units. I wish I had before pictures. I didn't, but these are the pictures that we posted and marketed to the public. And just to give some example, they're a mix of 2 bedrooms and 1 bedrooms, ranging from $300,000 to our highest price was about $550,000. And so this is a slide that I show folks when I work with the fair housing advocates and give presentation to first-time home buyers to kind of give them a tool of how to self-assess where I'm at. Just kind of the quick thing is I point everybody out to the call outs on the right. We have a list of BMR price ranges from $200,000 to $500,000, just kind of a minimum savings that you would need to have. Our HOAs are kind of a big factor because they can range anywhere from $400 to $1,000 a month, and that makes a big difference. And then I give folks, I always say this is the monthly payment or the total monthly housing cost is a good thing to compare to your rent, and it doesn't include utilities. So it's a good kind of apples to apples comparison if you're looking to buy versus rent. And then the income recommended for an affordable payment. So they can kind of look at where's my income, where do I fit? And there's a little wiggle room, so it gives them a little bit of room to have debt, or maybe they could have a little bit less income because we use the definition, which is 33% of household income here. Some lenders will go up to 45% of their income. So go to the next slide. And this is just kind of a quick summary of the purchase prices next to the annual income required, just kind of to show the affordability. So green is low income, affordable to low income household. This is based on household size. Blue is up to moderate income, and then the red is exceeding moderate income. The vast majority, the bulk of our units are going to be in this, I would say, 300 to 500 range. 500 is mostly going to be 2 bedrooms or above. So you can see that it's certainly it's still affordable, even in this current market, to its target, to the target income levels that we're looking to serve. So this is, a good sign to say that we're still able to meet the population that we're trying to serve. And then I just wanted to kind of put together a little like opportunities and next step slides, which, what we're going to continue to do is engaging with the owners early about maintenance, helping to essentially finance any of the repairs that need to be made, trying to bake everything into the sales price that we possibly can. I've been talking a lot more to HOAs because a lot of our HOAs are older properties. They're sort of self-managed, or they outsource it to, a big property or a HOA management company. So helping them, I'm trying to find a way to sort of help them understand their capital needs and see if there's ways that I can address problems earlier. I've certainly not in San Rafael's portfolio, but in other portfolios, there's been major issues with HOAs that can jeopardize financing for everybody in the community. I'll add, and just there's certain things that can happen even in the Capri complex. There's a particular individual that lives in a building that's not a BMR owner, but has restraining orders with multiple people in the complex. And that's always a disclosure item when we have to sell those units. And so there's a lot of things that can come up that we have to manage in these complexes. And then just finding ways to expand the buyer pool and doing more outreach to access and reach more potential buyers. And then under innovate and modernize, I think there's opportunities for us to restructure how monitoring fees work. So I know, there's budget issues throughout the county and many local city governments. So there's opportunities, and I've discussed this with Alexis, that we can shift that monitoring fee from perhaps the city paying to the program beneficiaries paying. So it's about $850 a unit. So per year. So it's not a huge impact to somebody who's somebody's income. It's like $800 a year, and it could take some of the burden off of the city and maybe repurpose those towards going on the offensive, whatever that budget allocation might be. Also finding a way to extract equity during resales, changing the way that we, when there is the opportunity. Some of our older units had really aggressive price controls, so they are well below even what their current income level. So the price is well below what it would be priced at if I looked at it as a new unit. So maybe pricing things as a new unit in those cases, and then escrowing funds for the city or returning them to the housing trust fund, so that we can extract some funds there and kind of go on the offensive. And then I make the note of, we can go to the next slide too. I make a note of like a shared appreciation tool. I really like the California's Dream for All program. I come from a lending background and finance background. And we were talking about property taxes earlier. And so I think there's a huge opportunity, and I see this specifically for the accessory dwelling unit space as being a tool where we can help low-income homeowners create that added equity, and increase the tax basis a little bit. And I think the shared appreciation model is really the most effective way to go about it, because from what I see, folks get about $2 to $3 back on their investment. For every dollar they spend, they get $2 or $3 back in equity appreciation once they're done with these accessory dwelling units. So maybe with that extracted equity or whatever programs, but finding ways to maybe go on the offensive a little bit and make a distributed portfolio. invest in our housing stock and increase some tax basis and potentially help create some more rental housing and some more security, stability for some of our aging folks that are struggling that are on fixed incomes and struggling with the cost of living. I think that's it. I don't know how to do.
You were awesome.
Yeah.
But some of those numbers are kind of small. I can't wait to see that up close on my computer. So we'll see. Councilman
It's
Hill.
big up here now.
Yeah.
I actually had a lot of questions, so I will
love it.
ask if you can go very concise on the answers. I will actually omit a couple of questions with the little that I received from there. So when the terms expire for affordability, if someone's owning it, can you describe what happens if they hold on to it after expiration? Can they then sell it at market rate, or how does that work?
Yeah, so that's, I think 30 years ago, nobody had any idea what was going to happen in the housing market, but that's essentially it. Like essentially there's a contract that gives the housing authority on the city's behalf to exercise our option to buy it at a certain price. Once that option expires, we don't have any control over what they do with the property anymore. So that's, essentially it's released from the program and it's essentially a market rate unit for them to do with whatever they want.
And would I be properly extrapolating that most folks might try to then cash in and move elsewhere? Or are they staying?
I see a lot of rentals. Folks they move out and turn it into a rental, and that helps pay for them to live somewhere else.
So they
You-
don't stay.
You had mentioned, thank you. You had mentioned giving credit for making improvements. What is that? How does that materialize?
So, if the hot water heater goes out, we use the National Institute of Home Builders 2015 survey of useful life components. So like if they needed a new hot water heater, essentially they'll just, that's a simple example. They'll spend 10,000 or whatever, 8,000 for a new hot water heater. They'll send us the receipts and show us, go see whatever work that's been done if necessary. And we just give them credit and depreciate it for like 10 years, whatever the thing. So anything from floors to, new appliances, things like that, we give folks credit if they invest in their property.
And then only just because I did this in my other life, I worked for the city and county of San Francisco on a pro bono project during the pandemic around that outreach and engagement with different personas in the community that could qualify for homeownership. I'm curious if you could briefly characterize, what is your strategy for outreach? And the reason why I say that is like one of the things that I learned in that process was that there are, different channels and marketing mechanisms that people who are more likely to qualify or become in a position to qualify are specific to the geography. So I'm curious, folks who are in San Rafael or folks who are outside of San Rafael that might qualify.
Yeah, so we clearly, through Marin Housing, I have a lot of access to the Section 8 community in Marin City and even the Canal District. We've done some outreach in, and then a lot of my partnerships with the Fair Housing Advocates in Northern California. This has kind of been a area that I've looked our unit. So our lottery pool is 85% low income households that make under $100,000. And when you start looking at the unit, when you start looking at the units that are coming available that are 350,000 and may have a $600 a month HOA fee, a lot of them have a limited chance of qualifying for financing. And even those that do, sometimes they look at their rent that they're currently making and they just kind of decide to bow out. So that's been a tension of I'm needing to open the marketing pool. So we're changing a little bit about how we do the outreach. And so I'm doing a little bit more outreach with brokers, the agents themselves that are already working with folks that are looking and trying to identify who are the folks that are working with lenders and real estate agents on the hunt now that are income qualified and trying to help them, be aware of our units and make sure that they're aware of these opportunities. But that is an area that I'm looking to kind of focus more on. So there's been some adjustments in how we do the lottery process that should free up my time working through lists of low income buyers to just now doing more outreach into more moderate income communities, for lack of a better term, or moderate income households for the home ownership piece.
Awesome. Thank you. And then the final one is just was to make sure, just to confirm what I heard is that most of the units that are coming into both rental and ownership stock for BMR are coming from density bonus law and I heard ADU and it seemed like that was a little bit more squishy because it requires owners of ADUs to be attracted into the program to participate.
That was like an opportunity that I see, not to, so kind of different from the inclusionary ordinance, but being able to give them some kind of financing. So there's a lot of low-income homeowners that could use extra income for their lifestyle, or what have you. And so I see this a lot through my rehab program. And I talk with a lot of seniors that have deferred maintenance. And of course, they do have a resource of reverse mortgages. So that's something I talk to folks. The only reason I would touch something like that is to make a serious improvement to my house that's income producing. But I see that as an opportunity. We can offer them something, and that would be their incentive to maybe deed restrict the unit for a period of time as a rental.
Well, I love that idea, and I hope more people will look at it at least as a prospectus, just to say, hey, this is an opportunity or an offer for people to consider.
Two quick questions. Section 8, what are you seeing from the changes in the federal government policy?
So I'm not the Section 8 expert. I do know.
You did mention that.
We do distribute information, and we have had, so I have a partner, her name's Jacqueline Mendez at the Housing Authority. And so I do work with some of the buyers. The changes that I'm seeing, there hasn't been major changes to Section 8 specifically. It's mostly public housing that's taking a big hit. Section 8, of course, there is a little bit. We're not like taking on new applications from my understanding, just because we do see that the allocation is either going to stagnate or be decreased. So we're trying to essentially allow people to fall off and not renew or not reallocate that voucher to prepare for it. And my theory is just, there would be a lot more angry landlords as a constituency than there would be just, the public housing. It's really just the housing authority that's impacted. It's the public housing units, not so much the Section 8, because I think the landlord community is going to be quite vocal.
Okay. And then just another question, you had talked about Sarafel being the greatest, underscore +1. But I'm just curious, just very briefly, how our data and our portfolio compares with other cities in Marin County. My underlying premise thinking, because we are a bigger city geographically, we have more units, and I'm just curious if that checks.
Yeah. So you guys do have more units. I would say also just in terms of market rate units, you guys do have some comparable market rate units in terms of price to some of the BMRs. So you guys are sort of the affordable, you have affordable units by definition. And then you also have the largest portfolio. It's 111 now. The county's the next with 85 units. The city of Novato is kind of different. They have, so they're the only portfolio I don't manage. They have 380 units. The vast majority of them were built in the 2010s in the Hamilton area. So they're much younger, and the units are priced much higher. So they're usually somewhere between 400,000 to 700,000 is sort of their spectrum of unit prices, and they don't control for first-time home buyer status or household size. So they're a little bit, and they don't offer as much seller assistance because their units are by and large newer. But in terms of age, you match the county. You have the largest portfolio, and you actually don't have as many expiring units as some of the other jurisdictions, which, stand to lose about 25% of their portfolio in the next 5 years. So.
Thank you. That's helpful. And I know we're running on time. We still have 2 excellent agenda items. If anyone has to leave, just go ahead and make your way out. I'm going to be respectful. But I do want to just give a moment for public comment. Anyone like to comment or have a question on this item? Yeah, go ahead, Omar.
Just important, I think, to put some nuance on the low income bucket. It's a lot of groups inside there.
Yeah.
And immigrants, most of the time, fall in the limbo on that.
Yeah.
While those programs are very impactful, they might not necessarily be eligible to apply for this, right?
Yeah, actually, my experience with immigrant households is they're a lot more resourceful. So I see this as like I see them as families that live more close together. They do a better job at pooling resources. So if somebody has an opportunity, they all come together to help that person. So, I actually sort of see the immigrant community more strongly at least in my current experience. They're much more engaged and much more aware of the resources that are available at Marin Housing.
I was thinking more about the requirements of the program themselves.
Yeah.
With someone without the status, on the limbo.
Citizenship. So mostly we concern that they qualify for financing. We do have to have at least one citizen be a part of the household. But yeah, so that we do have that requirement. But my understanding is mostly a financing consideration.
Yeah,
because
I think we are aware, just to make sure that we put that nuance. And I think the outreach will work if we have some support structures for low-income families to navigate, to be ready, be prepared, apply. That's just what the major gap we're seeing, even with existing rentals, is that when we pass information, say, hey, this is an opportunity for you. Then it comes with the application process, the readiness and credit history and all of that. And I think that is the gap in the county. And I think that's something that the Canal Alliance can maybe work with you on that space. We are exploring and launching that for our own housing strategy. It would be great to see how we connect.
Absolutely. I'll just say that I think the biggest value is really about like getting people finance ready, because it's really the lenders that dictate much of the process. So working with folks to make sure that their finances are in order so the lender will qualify.
Yeah. And we have provided some
absolutely.
collateral. My organization has stepped up into that space to provide that to the property owners and others. So
Great.
There might be some conversations for us to have.
Absolutely. Yes.
Thank you. No, thank you for your partnership. Any other comment on this item? Okay. Meeting platform down. Thank you. Do it. Fire hose like really quick and then we have the beauty. So go ahead. You want?
Thank you. Yes, thank you, everyone. So I'm excited to announce that the city's Open Go program will be launching next Monday, the 23rd of February. So right now the system is live for DPW permits and some special events permits, mobile vending permits. This notice is what's gone out to most of the applicants with current applications. So additional information is on that. If you guys have any inspections that you need to get done, it'll be transitioning to the new system. The website is up on the screen if you guys want to take that down, but it's also in this notice as well. So with the new system online, it'll be transitioning all permits for new applications for building, code enforcement, fire prevention, and planning. And it replaces our eTrackit system for new permits. So if you have a current permit in Trackit, you'll keep using that system throughout the end of June. All new stuff will go into OpenGov and all inspections will also go into OpenGov as well. So today we actually launched our inspection module in OpenGov and we have some requests coming in, so that's great. So staff will be approving those soon. And Monday is when all of the new applications will open. That is very exciting. So some of the key improvements with this system, applicants will receive automated notifications with the email that they have within the system, real-time permit status tracking. So what that means is within every workflow step, you can take a look at it, email the reviewer directly and get a status update there. Also improved reporting and transparency, especially within the workflow step to see where your permit is at. Additionally, you can submit your application online at any time and inspection requests as well. So if you have any questions, I'm open to answering them, but also there's a lot of how-to videos and how-to instructions within the website as well. If you guys have any questions, feel free to call us as well.
And I want to underscore this particular project because it's really a backbone for city permitting systems. The existing program is 25 years old. I helped launch it 25 years ago. So being here as this period of time, launching the new one is really exciting. But we also recognizing there'll be some transitional periods. So we're trying to get out as much as we can to our development community and then our users to let them know about the change, notices, informational videos. But we know there'll be a little change adjustment. But one of the pieces I'm really excited about is really kind of the self-help components of this new system. Because we do take a lot, if I look at efficiencies, we take a lot of what's my permit status? Well, you can check it yourself now. And so it's also the learning for that process, but it is an investment of the city into this system. And we're excited to bring that forward.
I just have to do a quick clapping on this one because Just to your point, I mean, this is foundational and it's also a really critical touch point that many of our community, they don't all come to council meetings, but they'll interact with the city through this. And so having us be able to show up in a way that's really. I just have a comment, no question.
I have one question. So when does E-Track sunset?
So there's a transitional period because we have a lot of applications in there. So we're trying to actually, for larger scale projects, actually hand or transition those into our new system. But then for others, it's just like as they attrition out. So there's this window period of time, and so probably better answer that in terms of what we're targeting.
We're aiming to end track it July 1. So getting off that system. We'll be closing out as many permits as we can throughout this transition time. And then for anything that's left open in there that needs to go into the new system, we'll be transferring those as well. So this gives us some time to close it out and do the data migration, which includes a lot of mapping on staff time.
Yeah.
Fantastic. I hope we put this out up here on the, yeah.
Yes, this has got thousands of emails gone out with this. In addition, it's upfront for applicants to take as well.
And we'll have Karen take a couple of those. Yeah.
Even up front, like when you're coming into, and there's that the bulletin board behind
Yeah,
the
or on the
plexi.
right-hand side where there's steps, so have
Yeah.
that. Great. Other public comment on this incredible item? I know we whipped through it, but this is the type of thing that is good governance, really, and it's not just today, but it's going to benefit our community for the decades to come. So congratulations on this fantastic item.
Thank you.
And then the final item of our agenda is the Gateway Beautification Project, which is my favorite item. I should have put it first on the agenda, but go ahead.
Hi, everyone. I'm Priya Nixon with the City Manager's Office. So I'm going to provide a very brief overview and we'll make sure that everyone gets this PowerPoint. But this item is listed in our in the council's adopted strategic plan, and the objective falls under Gateway Pilot Beautification and Landscape Improvement. So this is taking place at 2nd and Irwin. As you know, that's a key entry point for the city. So we're going to make it look better. So just for those who don't know, this is what it looks like right now. There's not a lot of landscaping at all. We have an old sign. So to make this more welcoming, we're going to update all of this. So if you want to go to the next slide, the next slide is basically the rendering of the landscaping that we'll do. So we're working with a consultant, Gates, who has done fantastic work with the city. And they've really prepared adapted plant material. And we've vetted this with our Public Works Department for maintenance, but also for the durability of color. I think that's really important to keep this. And then just so people know, I know can you go back to one slide really quick? So you see that there's different angles. We really wanted to keep it safe. So a lot of the plants are a little bit lower to the ground. You can go back. And so there's a listing of the plants. An example would be a lantana. So I think the landscape architect has done a really good job. So we'll go to the next slide. And this is a rendering, and I'm going to show a close-up of the sign. But this is what the overall schematic will look like. I think it looks really nice. I love the vibrancy of the colors. And then we'll go to the next slide, which is an example of the sign. So this is in Caltrans right-of-way. We don't have the ability to do a whole lot. Otherwise, that would trigger a 1+ year permit process. So we're going to keep this in concrete and use aluminum for the actual font, which I think will look really nice and refreshed. If you haven't noticed, we've cut out the bell, which is what's in existing of the current sign. And so that's pretty much it for the next steps. We should be getting 100% plans by the end of this week. And then the project will go out to bid. And we hope to award the contract within the next month and begin planting in April. So that's the presentation. I know it was a little bit small, but I think it looked really vibrant. So
Sorry, we're quivering down here. I just like drop the mic moment. Yes, okay, go ahead.
When is this going to be published that people in the public can see what you just showed?
Right.
we'll, assuming that you're going to publish the packet, so we'll make sure it's in there.
And can we put it in the snapshot?
Yeah, we can do that. Yeah.
Yes, yeah,
I
Director.
just put a plug in that,
You go.
knowing that this is a council priority and, critically important that you care for these gateways. Council approved a very limited budget for this in this year's budget, and what the plans are to be able to make, significant visible improvement with really a shoestring budget is, a good first step.
So that's why there's no neon. Got it.
It's,
Public comment on this item.
spend a lot of money on these.
Any other?
Sarah's got one.
Oh, sorry, go ahead, Sarah.
You know that San Anselmo sign, how it has that elk or deer and ours doesn't have anything? Is there potential to maybe add something down the line that is a little bit more artistic?
Yeah, so this is just a pilot program and we're going to embark in a longer process of thinking about what signage could actually look like. So that's a great point.
We all have aspirations, and then as the director just said, there's the reality of our resources. So I am just blown away, and I can't think of a better way to adjourn this meeting. So thank you all. I apologize for a few minutes over. This meeting's adjourned. Thank you.
I love the colors.
You do think for agenda items. Oh, well, sorry.
Not just your.